Good morning. Just after 9:15 on the 14th of November, 2019. And it's E from MarketWizards.com and eminywizard.com, reminding traders to use risk capital you can afford to lose. All right, let's take a look at the overnight range. We noted early that we had a push. I had suggested get paid by these 98s up here, 97, 98 last night if you were long side, because this is a psychology area. And my feeling was at the time that probably the games that have been played would probably take all night to get above that zone, if at all. We've had some really nice pushes and then sharp drops, and nice pushes and then drops. And right now, what I'm seeing is a descending triangle in the overnight range. Looking at this basic idea of 89, I was looking at this pre-market saying, okay, this is like a descending triangle. We've got lower highs. And I think anybody that's playing the convenient trade understand that the market's tired. We've been able to get, squeezes and sharp pushes by the boys, but then ultimately it's been a fairly tight range. So I'm looking at these points down here as our support below us. And if the 84 and a quarter low cannot hold, then I think we open the door to come back and test the 81s to 82s and even lower. That's 78. So that's why I've said I'm looking at this 78 back here as our expected support. Okay, if that breaks, then anything goes. So that's my assumption starting. And certainly this posture right here, you need the longs need to break this down, bounce, and shorter bounces, smaller bounces. So currently, I think we have the right to hit one bounce. We know that has not played out well over time, shorting in the hole. One time it will. Today, who knows? But that's the formation I'm looking at. And if you want to let the market clarify, I said make sure you paid if we could get there by 91s, 92s in here. And still, there's been not enough energy to do that. So you may want to sit sidelines for a few minutes, as we've done here and there, to let it shake out and then see if there's an edge. Typically, the convenient trade says play for the half cap, which is 91.75 right now. All right, here's our weekly. We're right into the middle zone. We know that. So if we bust, here's where we were last night. This was the zone that was rejected, that 90 and 98 and a half paid for sure. And we lost 95s as well. So throw away that extension there. Throw away this little one in here. And really the three boxes right now would appear to be that 98, that 95 to 91, 75. And then obviously this current range is 88 to 91.75. And that's our weekly range. So we're in the pipe. And I think right now the framework, if you want to think about a 10-point range that we're probably in, it's probably this 87 and obviously the 97 back up in here yesterday, last week's high. And that makes that 92 area the middle. So that's what I'm thinking right now. And obviously, if you're wrong, you take your stop. If you don't like the trade, don't do anything. Based on this, it's suggesting, and this being the monthly, 93 and a half and 85 support. So that's the range I think with a little bit bigger look that we should be aware of right now. And here is our daily predictive. And once again, is 86 an important idea as a flipper? And this was all white bars, push, push, push. So if we come backwards, it's really not a lot of support built up in here. They're just neighborhoods of interest. So I'm looking this at this area as supportive. I'm looking back here as resistance and range trade in between. Still have not let go of the idea that we can get up above the O2s to get that 4.5, but you know, that's not what trading's all about. It's just being aware of those ideas, not trying to prove a thing. This is a 2-minute chart that I've been watching. If you want to put it on a 5, over and under, over and under. You can see how much time it's taken to get this underneath. This is typically an umbrella trade, but it's only a 5-minute chart, not the 10 or 15 or 30. But we are underneath. And that's really how arches get formed. They rotate, and then you could bounce. But if you're underneath the rain line, then you're technically coming the other way till that changes. Problem is that's a very fast chart. And you can see how we're chopping over and under on the 10. And the 15, we're just still trying to hold it here, and we're up above that here. So this is a very messy chart. I call them messy when they look like this, not clear. Look how clear this was. Bang. And so when we go over and under, as I would expect during options expiration week, I'll be aware of these charts, but they're not my be all and end all to make decisions. And then I'm going to look at the 30 and say, okay, we chewed here, but got above it. But now we're still above this. So this is the point of saying, well, that 85 seems like a big idea still. 84, 85. So I'm going to keep my eye on this chart too. And typically we like, obviously, the half gap and gap trades. May take a while for that to develop today. My suggestion, if you're a conservative trader, don't do anything at the open. Just relax. You have that luxury. 89 is our angel. 97.5 the demon. And we can clearly see these points down here that are supportive until broken, and then back down in here. Market loves to shake traders out and then catch the lead shorts. So there's been no evidence yet. Time-wise, we should have had a bounce. We have not had a bounce yet of significance. And I'm not afraid to miss trades on a day like today. RTH. 5-minute chart. You can see where the rain line is here. So based on this chart, I'm going to drop this back to the 10. And we can see where this 85 is on the 10-minute chart. So my suggestion, let's use the 10, maybe even the 15 before we're done, but 10 for sure for the open. Because we've never been able to come back and touch this here. So and it speaks to the importance of that 92 area on even this chart. So on the open, this low right here is going to be an important look. And then below that, anything goes. So we'll put it back to the 10 for now. And then we'll adjust. Very, very choppy range. And you can see how your longer term line gives you some more stability. And then these are going to whip back and forth. And they're much harder to read usually unless you scroll out to deeper time frames. One point of support. There's another right there. So a little bit of a descending triangle as long as we stay under that line. So that's why I've said 95 resistance for now. And I believe the market's testing for support. Play well. Wish I could be more helpful, but sometimes the trade ideas just jump right out at you, and sometimes they don't. And if they don't, you got to be honest with yourself. Okay, I'm not feeling a lot of love for this open because we're right in the weekly middle. It's a kind of an important area right now that's being resolved. So my guess is, as we've done before, shake and bake is possible, and I posted that early that that's eminently possible. We'll shake and bake. Yeah, Don, same thing, Don. Cautious, mainly because everybody is gung ho. Gung ho. Okay, we've got just keep buying the pullbacks. The longs have had their way for a long time. Uh, as a corollary to that, all the bears, have been wrong for so long. We know they're going to be right one time, but typical, you'll get a pullback and then you'll get your bounce. So the half gap and gap trade doesn't have to be done the first 5 minutes of the day. Yeah. Thank you, Zeke. Good morning, guys. All right, let's get ready to rock and roll and we'll figure something out.